From the underwriting point or perspective, softening pressures are beginning to mount, and despite recent losses, capacity is at a 10-year high. Major losses are particularly felt by the fledgling Singapore market. Almost 2009 was not a bumper year in terms of profitability. It was hardly a disaster one either. The new Gulf of Mexico rating model remains untested following a benign windstorm this season. There has been an upswing in activity in the offshore construction sector. We'll just cross this, but these are the capacity. If you see in 2011, operating capacity, which is US dollar 4.3 billion, which is marked plus 13%. And if you see in the construction areas, still plus 17%. We have, so 2011 upstream capacity highest, if you see from 2000 figures to 2011 estimated realistic market capacity I'm talking about. So that upstream capacity highest since record began. But pricing increases for standalone OE and marine liability risks will still continue to increase. Profitability, of course, I leave it because this goes for the premium side for the because this is for the insurance industry to understand, but I'll just pass this. Now from the Lloyd's, if I see this still looks profitable in that this particular industry from the insurance point of view, and which will be for the consumer and for the industry, both sectors. Rating levels, of course, you can see they have been downgraded. Few of the insurance and reinsurers as well. Now these are the market dynamics for upstream. Now let's talk about downstream. Downstream insurers are beginning to compete for business in a manner not seen since the last truly soft market in from 99 to 2000. While North American market capacities remain stable, its international counterpart continued to grow. Various markets became more prominent, including Chartis, CV Star, and Zurich, Taurus, all you saw this. Following a benign underwriting year in 2009, the portfolio remained profitable despite the softening market conditions. The level of attritional losses has fallen to the point where rates could fall further before the inherent profitability of the class is threatened. The degree of aggression shown by individual insurers is now driving competition in the market rather than overall capacity. Regional markets are contributing to the softening process as well. Then again, the same downstream, if you see the capacity, which exclude Gulf of Mexico, which has happened, windstorm. While North American downstream market capacity remains stable, if you see. Profitability-wise, if you see the recent Canadian oil sands upgrader loss has already had a major impact on the downstream loss statistic for 2011. And then downstream energy portfolio still looks profitable despite increasingly soft market conditions. And the improved loss record since 2011 may well be down to general improvement in risk control and mitigation by the downstream industry, encouraged by the risk engineering approach. So still I see that the market is not that depressed. Downstream insurer capacities and average rating level, these are the market dynamics. You can well see that where it's going and where it was on the top in 99. The regional overview of the marine insurance. So we covered upstream, downstream. Now let's talk about marine. Global insurance market in flux. Asia, everyone knows that is growing confidence in Asia. There is a shift which is from the west to the east, and that's the effect which we are observing after the recession. Europe, regional strength, international capacity wise, you can see that. Going. Scandinavian country down, but still not out. The United States, rising prices. London market is still stable, traveling well. London, if you see, still Lloyd's, they are the rulers of the market. Still nearly 60 to 70% of market are covered by Lloyd's. So highlights, markets move closer to customers. It means it is the time that all the owners, asset owners, they have to come closer to the insurance fraternity or insurance broker, or you can say that the person who understands the market dynamics to take you and to safeguard your rights properly is just not something to save in terms of policies. the insurance company who can read the fine lines, and they are the experts. You have to deploy, and you have to bring them to. And this is that those days are gone when you just go to an insurance company with your asset, and then you see, and then you compare with 4 insurance companies, and then their prices. Say, okay, this is very good because they are giving the least. It's not that time, because there are many eventualities which we have not observed in the history, which is coming and which we have observed. So this is the right time to employ right people, right experts who understand the business carefully. If we talk about hull and machinery, of course challenges are ahead. A decade of underwriting returns downturns hit investment income, hull values falling, increasing reinsurance costs, underwriters press for rate rises, premium volumes fall, and plentiful capacity. If we talk about P&I, these are indemnity clubs where club takes decisive action, big claims drivers, time lag, there is asset reallocation, and there are regulatory issues which you have to comply as well. And if you don't comply despite of P&I covered, you could be in trouble. So, conclusion. Plenty of options open for buyers, as I said, but beware of the long-term implications. The current market conditions are now causing insurers to think again about long-term policies. Recently, the unrest in Middle East or North African region has led to an increased interest in strikes, riot, and civil commotions coverage. Intelligent insurance broker can help identify and quantify risk and bring them under control. They can create and implement customized solutions employing the most effective blend of risk mitigation, risk transfer, and advanced risk financing. These solutions go beyond traditional property or casualty insurance program to encompass strategies that can help increase a firm's revenue growth, enhance its net income, and strengthens its balance sheet. And that's it. Thank you very much. If you have any questions, I'm pleased to answer.
Thank you, Aftab.
I just want to understand the insurance with respect to piracy, specifically the kidnap and ransom policy. Do the industry incentivize ship owners in way of adjusting the premiums if by providing certain anti-piracy measures like anti-piracy water gun or having armed guards? Is that the norm? I'm not very...
This is not an insurance question, but I come from that marine fraternity.
I can take up if you like.
I can give you a bit of answer to that, just to satisfy your need. And you're a young chap, and you said, I want to learn in that area before, also with the presentation. See, in maritime law, there are certain regulatory effects which you have to imply as a vessel owner, and these are mandatories. Now we are talking about especially the area of Gulf of Aden, or the pirates, the Somali pirates, which those areas which they come and then they go in shelter. So there is a debate going on whether we take this fleet and then we have a joint forces, the Coast Guard, and they pass that channel. But you are not allowed to keep arms on your vessel as per IMO regulations. This is first thing you have to think of. No matter, we know what you are talking about, yes, for your own defense, you should be given sanctions to keep arms, but is not allowed for you. What we say is like your house, you have asset, and to safeguard, there's a department called police, and there is a security. So let everyone do their own job. You know, as a vessel owner, you're not supposed to. Where I said to you was KRA, which is, of course, that when it comes to what is policy, policies are the underwriters, they write as per the requirement, they make it for you. This was not some time back. This is something which came recently, few years back, and that too has to be covered or has to be under the regulatory authorities. You can't go and substitute something which others doesn't have. Everybody has to be given an equal platform. So if you opt that, what I said was that the shipping industry, for them, it's your choice or your option to take. If you are operating in that particular region, you can choose this, but it's a costly affair for you. I think I answered your question.
Thank you, Aftab. Just to add to this, yes, there is a reduction in the premiums which we can avail of if we follow the best management practices.
Yes.
See me afterwards, I will explain to you. Okay, ladies and gentlemen, thank you so much. We are running a bit short of time. Thanks, Aftab. Good job.